Investing Secrets with Kevin Attride, empowering you to succeed financially.
Today we're answering your questions, and I have a great friend and an expert, Paul Moore of Wellings Capital. Paul, what is a real estate syndication?
Well, when I first heard that term in the early 2000s, it kind of scared me because I had seen The Godfather as a kid, and they were talking about crime syndicates, so it didn't seem like something I wanted to be part of. But seriously, real estate syndication is an opportunity for a seasoned operator, hopefully they're seasoned, who needs capital to make the opportunity available for a lot of investors, a lot of passive investors who want to get a piece of that deal. So a syndicator might buy a $10 million self-storage facility that they think they can drive the value up to $14 million on, which is kind of typical thing we invest in. And so they'll go out and they'll arrange the debt. So they might get $6 million in debt to buy that $10 million property. And then they might get 40 investors averaging $100,000 each to make up the equity or the $4 million they need to close that property. And so each one of those equity investors has a stake in the property. And because debt's involved, the stake is leveraged, because even though the debt's not in their name, it's in the name of the syndicator, they're still getting the advantage of that. So with 60% debt, they're getting a 2.5x ROI on any improvements in income. And if that didn't make sense, we'd probably have to do a call to explain a little bit more. But at any rate, leverage gives the individual equity investor a tremendous advantage. Of course, it can work against you in a falling economy at the same time. So you want to be real careful with that debt. But a syndication is an opportunity to be part of one of these wonderful commercial real estate assets without taking the debt in your name, without finding it, without acquiring it, without operating it, without doing the property management, without doing the repairs. Somebody else is doing the heavy lifting, and then you're sharing in the profits with them. A typical syndicator will take fees at closing, and then they'll give the investors the first or the preferred return over many years, and then the real estate syndicator will typically get their profit share after certain hurdles are met. That's a real estate syndication, and I wish I would have learned about and been involved in them decades sooner than I was.
Paul, thank you for your guidance and your expertise, especially with this question.
There are more investing secrets that are quite powerful for you to build your wealth. If you'd like a VIP introduction to any one of our experts, click on the link below. Make sure you subscribe so you don't miss a single tip from any of our seasoned experts. Okay, watch the next video so you can capture our next secrets to investing. If you're ready, it's time for you to experience financial freedom.
The information contained in this episode are opinions not to be used as individual guidance. As always, consult your own financial team for your investment decisions.